Good afternoon, ladies and gentlemen. Welcome back to the Festival of Economics, those of you who have been with us before, and welcome to the Festival for New Arrivals. We're very grateful to see so many of you here. My name's Andrew Kelly from the Festival. Our next session is What Next for Britain's Economy? Unfortunately, the weather has meant that Jonathan Portes is not able to come, but we've still got a fantastic panel here today, and I'm delighted that it's chaired by Heather Stewart from The Observer. Those of you come to Festival Ideas events and see our work will know that The Observer is our partner, and we're very delighted, absolutely very delighted to have all the support that The Observer has given, so it's particularly pleasing to have them here today. And Heather will be a brilliant chair, and I'm going to hand over to her to move this forward now. So if you'd welcome Heather Stewart, who will introduce the panel. Thank you.
Hi everyone, and thanks ever so much for coming along on this grim old day. We've got a lovely broad subject this morning, which is where next for the British economy. And that throws up two sets of questions, I think, when policymakers and economists are trying to think about it, the Bank of England or the Treasury or universities or whatever. And there's a short-term issue, which is how do we get out of this, the zigzag, as Mervyn King has called it. We have a quarter of growth, we shrink for a quarter, we have a couple of quarters of growth, we shrink for a quarter. We don't seem to be able to recover in any meaningful sense. And how do we get out of that? How do we protect ourselves from the crisis going on across the Channel and the Eurozone? And there's a broader, longer-term set of questions about how we rebuild an economy that's spent a decade or so reliant on very strong consumer spending, on people borrowing money they couldn't really afford to, on where growth was flattered by the profits of the square mile and the banks. How do we rebuild something that looks more like a sustainable economy for the long term? And policymakers have a very tough challenge at the moment because they're trying to tackle those two questions at the same time, and while there's lots of turmoil going on, as I say, in the Eurozone and in the broader world economy. So we fortunately, I'm not going to have to try and answer those questions today. We've got a brilliant panel, hopefully, to do that for us. So on my right is Andrew Sentance, who was one of those policymakers as a member of the Bank of England's Monetary Policy Committee until last year, and now is a senior economic advisor at PricewaterhouseCoopers. On my far left is Peter Marsh, who is the manufacturing editor of the Financial Times, and has just written a book called The New Industrial Revolution, in which he talks about the role of manufacturing in economies, and I hope he's going to talk a bit about whether that's the way forward for Britain or not. And to my immediate left is Vicky Price, who was head of the Government Economics Service and is now a senior partner at FTI Consulting. And she too has a book which they're going to be available at the end, I'm to tell you, which is called Greekonomics, which is an excellent title. I think you'll agree apart from anything else. So I think we'll go in that order, if that's all right. And the speakers are going to talk for sort of 10 minutes-ish each, and then we'll take questions from the floor, because I think the really interesting thing will be to hear what kind of questions you want to ask and what you've got to say. So, Andrew, do you want to go first?
Okay, well, thanks very much, and good afternoon, everybody. It's good to see so many people here. A Festival of Economics. I don't think I've ever spoken at one of those before. Some people might say it's a contradiction in terms. Economics are meant to be the dismal science, but let's enjoy it anyway. It's certainly going to be sitting outside in the weather. Let me cover three topics. First of all, where we are in the recovery phase of the economy. Secondly, my ideas about the new normal for the economy. And thirdly, what policymakers should be doing. First of all, where are we? The UK economy has clearly not been growing particularly strongly over the last year, though it has been growing. And I think if you look beneath the figures and all the zigzags that Heather has referred to, and some of the more erratic factors affecting the growth of GDP, it has been some slow growth, somewhere around about 1% or a bit higher. But on some quarters that hasn't been very clear. And the Office of National Statistics hasn't helped with the way they've treated various bank holidays and things. But growth has been disappointing, but we shouldn't just focus on the growth figures when we think about how the economy is performing. And there are two things I would just draw attention to that give perhaps a slightly more positive or stronger picture of the economy. The first is that employment has held up through the recession following the financial crisis, and in the early phases of the recovery, much better than we saw in the early 80s and the early 90s. And you can just see that in the unemployment rate. It's stuck about 8%, which is much higher than we would like. But in both the early to mid-80s, it went over 8%, it's over 10% and stuck there for quite a long time. And the same happened in the early 90s before it came down. And if you look beneath those figures, there does appear to be job creation going on in the private sector, albeit a lot in terms of part-time jobs and self-employment. So the employment picture doesn't quite fit in with this more subdued picture of growth. And the other aspect that points in a slightly different direction is what's happening in terms of inflation. I was on the Monetary Policy Committee that was meant to keep inflation at 2%. I joined the committee in 2006, and for most of that time it was quite considerably above 2%. The only thing I can say in my defence is that I did try and argue for policies that might have helped contain inflation. But the thing about inflation is that inflation is the ability of companies to push up prices in the marketplace. And companies do need to have a certain amount of demand, a certain amount of confidence to be able to do that. So there's a slight paradox that businesses have found enough demand in order to push up prices, but they haven't found enough demand in order to increase output very strongly. And that all suggests to me that the problem that we have in the economy is not simply a problem of lack of demand in the UK. It's a problem that the economy is going through a period of adjustment following the financial crisis, and also adjustment to a very significantly changed international economic order. Obviously, we are all familiar with what's happened in the financial crisis and the shocks that has created, so that creates a need for adjustment. But the other dimension that we don't focus on enough is the way in which the growth of the Asia-Pacific region and China and India and those future superpowers is actually creating pressure, an additional pressure on Western economies from the increase that's creating in energy and commodity prices. And if you look at some of that inflation that I've talked about, that has been driven by rising energy and commodity prices. And that shows that, and that's an indication of another source of squeeze that's happening, affecting Western economies, which is not just connected with the financial crisis. So the way I like to talk about the UK and Western economies in general is that we're in a new normal of rather disappointing growth and volatility both in financial markets and in terms of energy and commodity prices, and relatively high energy and commodity prices, which is qualitatively very different to the world before 2007. And we shouldn't think that we can get back to that world before 2007. In the 25 years before 2007, the UK economy grew by, on average, about 3%, and consumer spending grew by over 3.5% over a 25-year period, even though we had a recession in the early 90s. And this was a long expansion, the like of which we hadn't seen since the 1950s and 60s. Now, at the time, we didn't perhaps appreciate that parallel and that significance. And when that long expansion in the 50s and 60s came to an end in the early 70s, the UK economy and other Western economies went through quite a complex process of readjustment that lasted through the 1970s into the early 80s. And I think we're in a similar type of process of readjustment. The sources of growth that drove the economy before 2007 I would characterise as three main things: a world of easy money, a world of cheap imports, and a world of confidence where the private sector had confidence that governments and central banks were in charge of economies. And in all those three respects, all those factors have gone. The easy money has gone, the financial sector is in a different position, and the banks are being regulated more tightly. The world of cheap imports coming from China and other low-cost producers is being offset by these energy and commodity price shocks that I've talked about. And the confidence that the private sector used to have that governments and central banks are in control has been significantly knocked and has dissipated through the financial crisis. So my prognosis for the UK is that probably in the short term growth may pick up a little bit if we see some stabilisation in the euro area and other parts of the world economy pick up. We won't get back to anything like that sort of 3% growth that we saw before 2007. We ought to get used to the notion that perhaps 1.5% to 2% growth would be relatively good in the current climate. And we probably will have to learn to live with this uncertainty and volatility for some time. So what should governments and central banks be doing about this? Well, in 2009 it was quite right for governments and central banks to try and stabilise economies when we have very big shocks in the financial system, cutting interest rates to very low levels, introducing quantitative easing. I supported all those things, actually, contrary to popular perception, as I've more recently I've argued for gradually raising interest rates. But I supported all those things to stabilise the economy at that time. But the policies that you need to sort of stop yourself falling into a deep, dark hole and to stabilise the economy are not necessarily the same policies that you need to try and get the economy then back onto an even keel for the future. And I think that's the challenge in front of policymakers now. In some areas, they're beginning to recognise that, for example, in terms of fiscal policy to get the deficit down. I think over a period of time, I'm not saying we need to start exactly straight away, we will need to gradually move up interest rates to get the balance, a better balance between the right incentives to save and the incentives to borrow. And I think what policymakers in general should be doing is two things that perhaps they're not doing enough of. One is trying to create a better climate for the private sector and for business growth in all sorts of different ways, through streamlining business regulation, perhaps reducing forms of regulation that are getting in the ways of business, restructuring the tax system, tax reform. So I think there is still quite an active agenda of things that we can do to make the business climate better here in the UK. And the second thing I think that policymakers should be doing is to try and ease that process of adjustment, not to try and stop the adjustment, but to ease it. And that's a difficult balance, but I think in some areas there's a danger that we're almost trying to fight against the process of adjustment. So when the government introduces, for example, its funding for lending scheme, which is something that's designed to encourage banks to lend, the danger is that you push lending too hard and we get back in the problems that we had before when we were trying to create the economy on the basis of excessive lending and excessive credit. So it's a difficult balance to make sure you're doing enough to help the process of adjustment and not fight against it. In the long term, I'm actually relatively optimistic that the Western economies will get back into perhaps not a stronger growth phase as we saw before 2007, but a more sustained growth phase. But the drivers of that growth are going to be different from the ones that drove growth pre-2007. And they may include things like investment in low-carbon technologies and new sources of energy, investment in other technologies. Each wave of growth has its own specific drivers, and trying to pick here and now exactly what's going to drive the next wave of growth is very difficult. I think the best thing we can do is to allow the market system to operate, allow the economy to adjust, and allow the private sector and businesses to seek out and find the opportunities that will hopefully drive a future wave of growth that could get underway later in this decade.
Thanks, Andrew. I think we'll and I think that's a very appropriate note on which to end that, because one potential future driver of growth, and one which George Osborne has seized upon, is manufacturing. He's hoping for what he's called a march of the makers, and Peter, perhaps you can tell us whether that's a sensible aim or not. So this is Peter Marsh.
Thanks very much for the introduction, and also it's great to be asked to come along to speak to a wide audience in a city like Bristol with a lot of manufacturing heritage, and with some very good things going on right now, as I'll explain. But perhaps I should just put what I'm going to say in a bit of context, because I work at the Financial Times, as Heather has said, but I've been given the slightly luxurious position, really, for the last 15 years of being able to travel around the world, talk to thousands of companies about what's going on in manufacturing, and on the back of that, I did write this book called The New Industrial Revolution, which came out just a few months ago. I mean, as I was explaining to Heather earlier, it was a slice of luck it came out at that particular time, because it took about 10 years to write, and even though I had the title quite a long time ago, it was just terribly difficult to write. But it came out at a time when, not just in this country, but around the world, a lot of people have become much more interested in manufacturing as potentially a lever for growth. It's a global book, so it doesn't just look at Britain. It's trying to be something that people would find interesting if they're sitting in America or China or Germany or anywhere really. But there are some useful lessons for Britain as it happens. And obviously on the theme of what is the future of the British economy, it's about Britain that I'll mainly talk. Very often when I say to people, you know, I write about manufacturing and I'm based in the UK, and then people often say to me, oh, well, there's not much of that around, is there? In fact, this happened to me just a couple of days ago with the new chief executive of Pearson, who is a very clever man, clearly, and a lovely man, because he's my employer, of course. I met him at a drinks thing, and he said to me the same kind of thing. And I said, well, you know, do forgive me for disagreeing with you when you're my employer, but you are wrong, because actually in Britain there is much more in manufacturing going on than people think. I mean, obviously, in 1895, Britain was the #1 manufacturer in the world with a share of total manufacturing output of about 20%. And it slipped, of course, but it's actually #9 now, which is higher in the league table than a lot of people do think. Its share of the world economic output in manufacturing is 2.3%, or was last year, which is obviously less than it was. But of course, the reality is, over the last 100 years, a lot of things have changed. And sometimes I'm still amazed by people, what they say, actually. For example, last night, in the session here, which I came to, I think somebody in the audience kind of expressed surprise that before too long, China was going to be the world's biggest country by economic output. But of course, it does have 1 billion people, something like 1/5, or more than 1 billion people, 1/5 of the of world population. And you have to ask yourself the question, if human beings have been around in the world in recognisable form for 10,000 years, after 10,000 years, surely you should be getting to the point where the countries with the most population have something like the same percentage of economic output, because all the laws of history tell us people gradually learn things, they get better, they become more productive, and unless you're given some amazing good luck or some fantastic ingenuity, then the more people you have, the more economic output you have. So, of course, the fact that China is going to be the world's biggest country with maybe 1/5 of the world's economic output shouldn't really surprise us, because it's got 1/5 of the population. I mean, why my book, the title, is of some relevance is that, of course, the first industrial revolution did Britain and other Western countries a great dose of fortune. It gave them the wherewithal for 200 years to be much better than their populations would have indicated. In other words, Britain in 1900 was able to have almost 20% of world manufacturing output, but with only something like 1% of the population. That was because of the productivity enhancing characteristics of the first industrial revolution. So now we're a lot lower down the league table. We're not gaining so much from the fruits of that first period as we did. Other countries have caught up, but that's only to be expected. China is now the biggest manufacturing country. It's already the biggest, but only since last year. America was the biggest manufacturing country for 100 years until last year. It's only just about second in position with a share of something like 18%. China's now 20% already in manufacturing. Britain down the league table. But still with an awful lot of opportunity. And of course, Heather mentioned that the government has in a fairly stumbling way, it must be said, made a few points about manufacturing, but without really understanding what manufacturing is all about. And Mr. Osborne came up with this phrase. Again, I don't think he really understood what he was talking about a year or so ago. I mean, it's not surprising, really, because manufacturing is quite hard to understand. There's a lot more there than people imagine. I mean, my basic take, which if people want me to, I'll elaborate on, is that Britain has got a very good set of opportunities because it so happens that the various parameters of what I'm calling the new industrial revolution happen to fit in with things that Britain's actually quite good at. The ability to network ideas around the world, the capabilities in technology, the kind of lateral thinking that you find a lot of engineers in Britain have got fits in very well with my thesis, which you can all read about, of course, if you buy the book.
It's very subtle thesis.
So I won't go more into that, but there are more opportunities here. I mean, just to touch on that in the time of Ed, I'll just touch on two examples. They're both appropriate because they both are in Bristol. They tell us something about how this world is moving. In fact, yesterday I did two things, apart from coming here. In the morning I went to GKN, which has got a huge factory on the outskirts of Bristol. It was going to be a distribution warehouse for Asda, but GKN turned it into a kind of cathedral of manufacturing. You go inside this vast room, like a cathedral, and it's all a clean room, so it's all temperature regulated, etc. They're building out of carbon fibre probably the most challenging and interesting bits of the Airbus A350 aircraft, which of course Airbus is building. This is called the trailing edge to the wing, which is a kind of technical term, but it's a great big bit of carbon fibre made of, say, 300 parts, which is vital to keeping that aeroplane flying. And it obviously gets fixed onto the wings, which are being built in North Wales by a bit of the ADS. But the point about it is the most exacting technology that you can't... There's probably one other place in the world doing anything like that. It's being done in Bristol because the GKN engineering capabilities are very strong. They were able to put that investment in. It cost them £175 million. It doesn't employ lots of people. There's only 300 people there. But it shows you the kind of thing Britain can do. You can magnify that a few times and you can get really quite a strong impact economically. The second people I saw, much closer to the centre of Bristol, a team of 50 people in a building making, well, I say making, they're a semiconductor company, but they are construed as a manufacturer. They don't have their semiconductors made in Britain. Physically, they're produced in Taiwan, but under the government classification of how you classify companies, this would be classified as a manufacturer because they own title to these goods. They happen to do all the design and all the ideas are worked out in Bristol, but their name is on the microchip that gets sold. It's interesting talking to them because their ideas evolved essentially from a bit of government policy 30 years ago. Some of you will remember in Bristol was set up the headquarters of Inmos, the state-owned semiconductor company. It was Britain's answer to Intel. It never particularly did very well, but technically it's sparked off a lot of very interesting ideas. There's probably 2,000 people in Bristol now who work in for various semiconductor and electronics companies who can trace their evolution back to Inmos. This company called Exmos is one of them. It's all based on the ideas of David May, who again some of you may know, who's a brilliant computing professor here in Bristol. He was one of the first employees of Inmos, as it happens. So his ideas all trace back to that, and they've got a new way of programming devices, which, if it all works out, if the venture capital works out, they've got $40 million of venture capital. They probably need a bit more, but if it all works out, it will be a big success story. There's lots of examples like that around Britain that people just don't know enough about. Which kind of backs up my assertion that there's more opportunities, more of a chance for Britain in this new age than a lot of people think. So just to end up with a couple of things about government policy, because I think certainly the idea of a state bank for manufacturing and industry and business is a good idea. Vince Cable, he's been dragged and screamed to come to this conclusion. Mr. Osborne doesn't particularly like it, but they've kind of come up with an idea about this, but I'm not sure they're completely sold on it. But that's a step in the right direction. But what's more needed than anything in government policy is that they're doing a lot of the right things. They're seeding technology. They're trying to protect the science and technology budget from government cuts. But what's needed more than anything is to raise awareness of what manufacturing is, what it means, and what the opportunities are. And it's not just the government people that need to understand that, it's people in general. So I think the more sessions like this, where people can explain the possibilities, the better it is. So at that point, I'll draw to a halt and go on to the next speaker.
Thank you, Peter. It's very nice to hear some upbeat news, I have to say, as someone who writes about the UK economy quite a lot and thinks about it quite a lot. You don't get an awful lot of that. I'm not sure how much good news we're going to get from Vicky, but we'll see. But as Vicky Price is going to talk a bit about the Eurozone background to what's going on here at the moment and you know, how that affects Britain. Vicky.
Thank you. We've all written books, it seems. Some of us have...
Plug away.
Andrew, you'll get there eventually, I'm sure. Mine was written in a hurry because, of course, a lot was going on, and I was keeping my fingers crossed that by the time the book came out, Greece would still be in the euro, rather than having left. And I have to declare an interest in that. I've actually written a number of the industrial strategies for the government in the period that I was there, and debated a lot of them with Peter in the past, and I share his enthusiasm. But as I was, after I left the government, started commenting on the UK economy and international, I think I remember one day being in Sky News, and there was a very long debate in the Greek Parliament about passing some of the austerity measures before the second bailout. They didn't know what they said, and I foolishly translated on air because I'm Greek-born. And that was really the beginning of the end for me, because I became suddenly the sort of economist who was there to explain and, up to a point, defend the Greeks, who, of course, had ended up being sort of caricature of lazy, corrupt, not wanting to pay their taxes, etc., etc., a lot of which is true, but not all of it, really. But he has some interesting points to it, because looking at what was going on in the Eurozone in parallel to what's happening in the UK, you could see some very interesting comparisons across, obviously, even though Greece was supposed to be the extreme, and wouldn't it be great if Greece was sort of knocked out of the euro and everything would be fine. In fact, lots of British newspapers, including the Financial Times, dare I say, Peter, seem to be following that line, to my huge fury, I have to admit, because they didn't see what the implications would be for the rest of Europe, which now I think the Europeans have finally realised to be the case. But obviously what was going on, and what I think is going on in the UK as well, is not, in my view, a great leap into a different type of growth for the future to which we're all stuck forever. It really is the effect, the simple cyclical effect of the financial crisis that we've all went through, and the amazing policy failure in the sense of deleveraging, in other words, cutting back on the policy front, on government front, at the same time that the banks are pulling out of lending. Lending is dropping like a stone across Europe, which is very, very bad for growth there. So banks are pulling out in order to re-establish their capital positions, but also to a considerable extent to just survive, given that they're being supported now by their various governments. The corporate sector has cut back very significantly and delivers. They're not investing at all. They have money in the bank to use. The household sector has been doing the same. In that environment, it's not at all surprising that we are not growing, and neither is the Eurozone growing. One of the countries that is the US, which has decided to actually stimulate its economy until it now hits the fiscal cliff that it's about to. And the emerging markets, which carried on growing, but now they are slowing down as well. It is impossible, as a small island, to keep on growing at the rates that we did before with all those policies taking place and with everyone around us, particularly the Eurozone to which we export 50% of our goods, also collapsing. The forecasts for the Eurozone for next year are for 0.1% growth. 0.1% growth can very easily translate into a serious recession. And a number of the countries there are, in fact, going through a recession. And Greece being the most extreme, it has had 5 years, is soon to have a 6th year of straight decline in GDP. How would we feel in terms of protest? Would we be sitting here? Would we be burning something if our GDP had fallen by 20% over 5 years? And unemployment was at 26% and youth unemployment 58%. You wouldn't be sitting here happily. You would be very, very angry indeed. Perhaps you are angry already. So I don't know how many of you are in dire straits right this minute. But the majority of the Greeks I know are. And that is, of course, beginning to be felt across Europe, not only by the countries that have gone for a bailout because the financial markets went on strike, but also by those which are doing it themselves so that they avoid going for a bailout. And look what's going on right now in France, where the austerity measures are going to really hit their output as well very significantly. In that environment, even Germany, which was the locomotive for growth in Europe, is slowing down and it's likely to grow by 0.8% perhaps next year, if it's lucky. So the German economic miracle, too, is disappearing down the drain. And why have they been able to remain competitive? It's not because of some huge rethink of their industrial relations. There's been a little bit of that, but they like to talk about this. It is because they have gone and outsourced practically everything. So the vast majority of what is produced in Germany right now comes from Poland and other countries. And the good thing about Greece is that it's now cheaper than Romania, because the only way that the countries that are in the Eurozone can actually react to what's going on is by having internal devaluations, in other words, cutting wages very, very significantly. And now wages have dropped by about 30% from what they were, but also, of course, pensions have gone down by anywhere between 40 and 60%, and so on. And remembering what we were discussing this morning about welfare payments, one of the interesting things about us not wanting to really join the euro was the great, great concern about the social contract that we all had to import from Europe. In reality, the social contract in Europe is disappearing. The agreement that there is between the state and its population is now going progressively. And by the time perhaps we are prepared to sort of embrace the Europeans even more, then we might actually find we have rather a lot in common in that respect, because it's all been scaled back. So in my view, it's policy mistakes, the lack of regulation, everything that happened in the US that led us to this point. It's not some great big change in the way in which economies operate. There's no real reason why we should even be worrying about rebalancing the economy. Let's hope we can get some consumer spending back and living standards improving so we get the demand going. After all, everyone who castigates Germany for having a big surplus says, please get your people to actually spend a little bit more in the domestic economy and also spend a bit more in terms of importing goods from the rest of Europe so that we can get those economies going too. Let's do something about the competitiveness issue as well, which of course has been lost in all these countries that were poorer, where wages have started going up because of the euro, the fact that there was a single market with a single currency, it was inevitable it would happen. And let's see how we can get that rebalancing between the countries going. That's the most important thing. The deficit ones, trying to do better in terms of exports, the surplus ones, please can you import a little bit more? But nobody is necessarily listening. So it is a failure of policy which has led us to this position. And it's not beyond the possibility of people's brains to think about how they can alter it. And what is really interesting and why the Greek issue is again important is because of how thinking is now beginning to change. As you probably are aware, the International Monetary Fund has been very involved in the rescue packages for those countries and has imposed various conditions in terms of how those countries should behave if they are to get any money. What it did is impose huge austerity measures. Think about what's going on here right now. Huge austerity measures, expecting them to have an impact very early on and expecting them also to be accompanied by structural reforms, opening up of the economies, improving the labour market operation, eliminating corruption, of course, which is very important, improving tax collection, very important things that should work for a normal democratic economy. But he did it too fast and too tightly. and in the wrong way. So what are the lessons for us to learn? First of all, that the IMF has used, I think Greece has been a catalyst for this rethinking. It now says, if we ask you, when everybody else is also slowing down, everyone else is deleveraging, in other words, taking money out of the economy, and you can't export your products to anyone because they just won't buy it, they haven't got any money themselves, the impact of a cut in government spending is vastly higher than what we originally thought. That's what the IMF is now saying. So it's reworked its multipliers, if we want to call them that. And it has implication for us. Are we doing the right things here? Are we going too fast? A number of people are arguing that maybe we are. But what, in my view, is even more important is they have actually looked at the balance between the bits that have been cut by those various austerity measures, whether they're here in the UK or anywhere else. And have made it very plain that what seems to have happened is that people have gone for capital spending, which is very easy to do. You can just cut it like that. We've done exactly the same here in the UK. Instead of looking more at the current spending, which is unproductive. So what's happening here in the UK? Current spending continues to go up. Government spending has remained a positive impact on the economy. Capital spending slashed. Now, that is crazy because, of course, it's capital spending that has the greatest links with the private sector, because it is companies that provide construction, infrastructures, and so on behalf of the government, and therefore leads to higher employment, higher skill levels, and certainly keep the economy going. And it's very important regionally. Regions benefit from infrastructure spending, and whether it's construction, housing constructions, and so on, which is absolutely essential for it to happen too, as we heard this morning. So my message is, rethink. If there is any rebalancing that needs to be done, don't worry about anything else, reducing the size of the financial sector. We need it. We think we want to reduce it, and we are encouraging banks to lend more. But it is really rethink how you spend the money you raise, and perhaps raise more. My view has been that given that we in the UK can actually borrow so cheaply, we can easily, given that we are a safe haven, the government can borrow at very low rates right now, certainly negative in real terms, go out and borrow more, and encourage growth that way, spend on infrastructure and housing, and your debt to GDP ratio will actually miraculously decline much faster than you think, and the economy will do so much better. Thank you.
Well, we've had some very contrasting ideas there about the problem that we're in. It's a sort of long-term adjustment to fundamental, radical structural change in the global economy, or it's a short-term mistaken policy worldwide that's plunged us into this situation. It'd be great to hear what you think. I think we'll take sort of maybe 3 questions at a time, I think. So it'd be great to see some hands. There's a mic somewhere, I believe. Is there a mic somewhere? At the back there. So if you could wait till the mic comes to you, that would be great. The chap here in front of the pillar with glasses on. Yeah.
There's another mic there.
Just a question on monetary policy, addressed primarily to Andrew, but obviously Vicky or Peter could answer it too. If you're on the MPC still, Andrew, what would you be advocating by way of monetary policy? Would you actually be calling for higher interest rates at this juncture?
Thank you. We'll take a couple more. There's a chap in the middle here in a white top. Oh, sorry, I'm making you. Couldn't see where you were. I'm making you run miles. Can you pass this on? Thanks.
Thank you. I think I'm right in saying that Tim Jackson, in his book Prosperity Without Growth, said something along the lines of, we're spending money we don't have on things we don't need to impress people we don't like. Now,
whether you said it or not, it's a very good line.
Yes. So my question to the panel is actually an ambition to return to long-term economic growth actually feasible, or perhaps more importantly, even desirable?
Okay, good question. Should we take one more? Chap in the second row there. Oh, actually, I meant this guy here, but we'll try and get round to. We've got plenty of time. We'll try and get round to as many people as we can. Thank you.
The British financial institutions don't invest long-term, or haven't invested long-term, particularly in manufacturing companies, and what they do is trade companies. Do you see that changing?
Lovely. What lovely, concise questions. Andrew, that was a sort of yes/no for you, wasn't it? Would you be voting for a rate rise? You consistently voted for rate rises, we should say. Should
well, I have this reputation that somehow I'm always voting for higher interest rates. Just to get the record straight, I voted for all the reductions that the Monetary Policy Committee made and all the quantitative easing that they injected before in 2009, because that was right to stabilise the economy. In 2010, the economy started improving. And in my view, there is really quite a big challenge if you buy into my view that we're going to be in this difficult growth phase while the economy is adjusting for some time. Are we going to leave things just as they are at 0.5% interest rates and hope that at some point in the future the circumstances will come along that will be ideal to push interest rates up, perhaps because inflation has taken off again? Or are we going to, in a gradual way, start to nudge them up, and even perhaps if you have to reverse that for a while, try and get a better balance over a number of years between what is needed for the right level of savings and investment in the economy, which is a positive real interest rate, and of course making sure you're striking the right balance between that and the need to make sure you don't knock the recovery on the head in the short term. Now, when the euro crisis sort of unfolded in the middle of last year, I think it's quite right to back away from the idea that interest rates would need to rise in the short term, which is what I did. I didn't support more quantitative easing. But I do think central banks like the Bank of England do face a challenge of getting interest rates back up to a more normal level, not to say like 5% where they were before, because we have to take into account the fact that things have changed in the financial system, but say somewhere between 2 to 3% that will begin to offer a better return for savers and also create a better basis for interest rates for long-term growth, because economies that have negative real interest rates in the long term, that encourages people to push their money towards things that are not necessarily productive, and that's actually going to potentially get long-term growth in the long run. So I would be in favour of what I wrote an article on this in the PwC, a UK Economic Outlook, which I know everybody in this room would have avidly read. It came out quite recently. No, I'm not actually trying to plug it. We joined the 21st century, so it's available online on the PwC website, so you can read it there. Can I just make one comment on this business about long-term growth? Should we be, abandoning long-term growth because it's environmentally, not the right thing to pursue? I do think we have to strike the right balance between environmental objectives and GDP growth, and I agree with the general view that this obsession with GDP growth has been greatly overdone. We should be trying to look at how the economy is performing in the round, even in terms of narrow economic indicators. It's not just the rate of growth of GDP, but it's employment, and there are many other indicators that you can use to see how the economy is going. But I do think that we can't here in the West, with very high living standards, then say, well, suddenly, because we've got environmental concerns, we're very happy with where we've got to living standards. The main challenge, I think, for the environment is going to come from countries who want to move up to the sort of living standards that we're enjoying. And I think it's very hard for us to turn around to them and say, oh, you shouldn't pursue economic growth, because they're starting from a very different position. And I think that's the big challenge I think we face in the global economy. That's where a lot of the environmental pressures are coming from. And so I think we have to find a way of getting growth, but in a much more environmentally friendly way. I don't think we're going to find ourselves that we should actually give up on economic growth. But in terms of Western economies, it's employment as much as growth is probably the major concern to individuals.
And there is quite a lot of work going on, isn't there, of different ways of measuring whether you call it well-being or happiness, or which you can be keener on or less keen on. I mean, actually, employment is quite a big index, but there's quite a lot of work going on about whether there's some better way or broader way of capturing.
I don't think there's a magic better way. I think you need to look at a wide range of indicators if you want to see how an economy is performing.
Vicky, am I correct in saying that you would not be voting for a rate rise if you were on the Monetary Policy Committee? I'm
absolutely.
I'm guessing.
You're absolutely right, and I'm also one of the people who don't really worry fantastically about inflation, I have to admit, because of course inflation eats your debt away. which is quite good news. And I mean, the good thing is that while you were there in the MPC, we had inflation at 5% and interest rates didn't move, despite your great efforts, which was rather good, that you were in a minority, I have to admit. And inflation did come down because it was created not by noises in the economy, which suggested that we had a problem since wages were low. It was created by things like high energy prices or even raising of VAT. And those are not things that you should punish people by raising interest rates as a result, even if you don't have the right balance of savings and investment. But actually, we do have the right balance of savings and investment. Its savings ratio is rather high. It's been high by historical standards. And what is more, there is an awful lot of money around that can be invested. And it's not waiting for a small rise in interest rates to do that. It's waiting for confidence that the economy is going to be growing before it is invested.
The answer is that, I mean, certainly a lot of companies are starved of the right kind of sympathetic investment. There's no doubt about that. Not necessarily by the big institutions, but certainly by the banking system as it has currently evolved, which is why the idea of a state bank is a good one, because the idea would be that you would raise money in this institution not from government coffers, but from getting it from the sources that are available in the private sector, and borrowing at decent rates from them. But then you would put this pool of money in the hands of people who knew a bit more about industry, were sympathetic to the aspirations of some of these people who are currently not getting the cash, and certainly weren't just handing it out to people because they seemed like a half a good idea, but were giving it to people whose ideas fitted in with the kind of capabilities that I was sketching out earlier. So something else is required, and like I said, the government is kind of inching its way towards something, a bit like the German KfW, which is a state bank there, and even the Americans have got various state institutions which do help these kind of companies. So certainly something else is required. I mean, perhaps I could just touch upon the question of, do we need long-term growth? Because, of course, you could say, well, why do we need it? I mean, of course, it is a good point, because obviously the whole of Western civilization is all about growth. You always want growth. I mean, but I don't think it's just a kind of vanity thing. I think it's because even in a country like Britain, there's lots of people whose incomes aren't high enough, who could do with some extra economic output themselves to give them better incomes. And obviously you don't have to go very far throughout the cities of Britain to see these people with your own eyes. So the idea that you're going to say, okay, we'll be happy with zero growth, which of course means for some people quite a lot of growth, and for other people a lot of contraction, is just not something we should contemplate. And also, as one of the other, I think Andrew mentioned, you've got large sections of the world who are living in abject poverty. And now obviously they've got to do something themselves with their own economies, but through some of the exporting opportunities that are available to countries like Britain, you can have a bit of growth yourself in your own country, but also raise living standards and capabilities elsewhere. So the answer is yes, we do need growth.
And Vicky, you wanted to come back?
Just on the finance for production, if you like. I mean, there is an issue of the incentives that are out there. So if you have stock options and you get remunerated by how fast the share price goes up, the surest way of doing it is by doing some sort of merger, buying a company, and for a while it looks good and then you benefit. So clearly the incentive structure needs to change. And the other issue is that if you, which is I think a possibility, if you reduce the ability for people because of the tax treatment to go for share buybacks, so they spend all their extra money instead of investing in something, buying back their shares, that is a bit of waste, obviously. In itself, it raises the share price, of course, and you can get so you can actually look at the incentives that are out there for investment, which could perhaps then lead to much more productive investment rather than the financial sort of engineering that seems to be taking place right now.
Okay, let's take another Three, there's a chap there. You stop with you then, sir.
Yeah, I'm having more difficulty with this debate than the other ones, because I think with the other ones I had sort of an idea whether I fell down on one side of the argument or another. But the thing is, Andrew seems to be saying the thing to do is to have more free market and we'll get back to where we were. Oh, but by the way, we're going to have higher interest rates and, you know, this inflation larceny of we're going to lose the value of our savings, versus Vicky Price, who's going to get us into the same mess of relying more on European integration, more on harmonisation, less democracy, and, oh, by the way, we're going to borrow lots more money, which is easy to do. We can easily go from borrowing 1 trillion to 1.2 trillion, because we'll only be paying 80% of it back because of, you know, nicking the money through inflation. And I'm not sure either of those particularly sound very, very attractive.
You'd like a third way, in other words. I think we tried that as well. But okay, great. And there was one over here.
Yes. What do the panel, because not much was mentioned about the potential of the renewable energy sector to create significant employment in the manufacturing sector that seems to be pretty grossly neglected by the current government.
Okay, and one more young chap in the, sort of in the middle there. Sorry, I keep picking the people as far away from the mics as possible. There we go.
Andrew seems to talk about wanting a rate rise pretty soon. But I think one thing that's been neglected so far is talking about lending to SMEs. I mean, SMEs are meant to be the backbone of the economy, and yet with these low interest rates, it would seem that banks are just simply strengthening their balance sheets and creating wider profit margins on their lending, and SMEs simply can't get finance to grow. So I was wondering, what are the alternatives in getting lending to SMEs improving?
Okay, great. Do you want to go first?
Okay, I think we need to be careful about caricatures. I did try and say that I'm not actually arguing now for rising interest rates, but it's a medium-term challenge over the next few years. And I don't think we can go back to the sort of rates very quickly that we had before the financial crisis. In terms of getting the right balance, I think there is governments and central banks have actually put a lot of stimulus into the economy. One of my arguments, I think, why I'm wary about going down that route of having more borrowing, more stimulus, is we did an awful lot of that, and there are limits to the ability of those policies to deliver. At some point, the economy has to be allowed to make an adjustment. And yes, the adjustments the economy needs to make are not going to happen very quickly, and there are going to be there are going to be periods, there's going to be a prolonged period where unemployment is higher than we'd like, growth is weaker than we would like. But I suppose my point is I'm not sure we can do a lot to change that. If we did even trying to do more to change it, would actually then mean we've got to reverse those policies in the future. And yes, I do have confidence in markets if we let them operate. And in those markets, small and medium-sized companies are a very important element, enabling companies to start and companies to grow. And initiatives that help those companies get access to finance are probably a good thing. But we do have to recognise that actually a lot of small and medium-sized companies are getting access to finance in the economy at the moment. I'm a bit wary about this idea about a government bank, because I think the idea of a government bank is that we think the government is better placed to take these decisions, or some government-appointed people. And I just wonder whether they are going to, through that mechanism, we're going to get the right decisions. So I think we have to get a balance between allowing markets to operate, providing the climate in which business can operate. Yes, we don't want to push interest rates up very dramatically and knock confidence. But part of my argument is that if we delay that decision for too long, there is a danger that the private sector then finds that when the rise in interest rates, comes, it is actually a bigger shock because we haven't been trying to raise them gradually in the short term.
Vicky, do you want to come back on that point about borrowing more and getting us into more of a mess, and then perhaps we'll ask Peter about green
Perhaps.
technology.
Well, I'll talk about caricatures as well. But I think the issue about relying on Europe, I mean, my real concern is that we are stuck with having to rely on Europe in terms of our exports, because they are the major one. We can't very easily suddenly start sort of selling an awful lot to the newly emerging countries. We do, of course, also sell to the US, which is about to go into a slowdown too. And what worries me about Europe is the mess that they let themselves in for. And in fact, what I'm arguing in the book is that basically Europe has been terribly incompetent. And one of the reasons why the UK has become more Eurosceptic and why everyone, yes, is behind the EU budget thing, even though actually we get most of it back and it's peanuts in terms of in relation to GDP, the European GDP and ours, is because of that incompetence in Europe, which has been a policy incompetence. They didn't do it right, and they left it too long, and the Greeks messed it up. There's no doubt about that, but so did loads of others. And the politicians haven't quite understood it. So in terms of borrowing more, this is interesting. What I did say very clearly is that we needed to rebalance. So we've kept current spending still rather high. But
that's
yes,
day-to-day
it's the government
spending,
yes.
isn't it, rather than long-term investment?
No, indeed.
Yeah.
It's the day-to-day government spending rather than long-term investment. And you need to rebalance it so you spend more on capital. But one way the government has been trying to do it, of course, is trying to get the pension funds and others interested in investing in this. Remember what happened with PFI. What happened with PFI, which is a private finance initiative, is that we actually let companies come in and run our hospitals and everything else, which, in fact, in many cases, new hospitals were built when all they needed was a bit of refitting. But the cost, because of the guaranteed returns that it's left us with, is crippling all these entities out there, as we know. If we do a similar thing in terms of our infrastructure and let the private sector run and then get all the benefits from it for decades to come, it's just going to be more expensive for the country as a whole than the government borrowing very cheaply, very long term, which doesn't cost us very much in the short term at all, and actually, you may never repay it if you don't want to. Or you can print some more money when the time comes. This is the good thing of having your own currency. Is a better balance in terms of what the impact on the economy, both in the short, medium, and then actually in the longer term too. That's basically what I was arguing. On interest rates, I mean, the point was absolutely right, because I don't believe in the government bank either. But it is true that when we're talking about raising interest rates, that's one thing I agree with Andrew, but the raising interest rates may make a difference at the margin. But in reality, most SMEs now pay more than they were paying before the crisis started. So indeed, you're absolutely right. I mean, margins have been quite high, even the wholesale costs have been quite high too for the banks. But this has been a sector it's been an issue which has been ignored, I think, for a very long time. Yes, there is access to finance, but my God, it's expensive when it comes, and not particularly helpful for small firms.
Peter, green technologies, is that part of the new industrial revolution, do you think? Is that an important sector?
Well, yes, because I suppose my way of looking at it is to broaden it out a bit. Of course, there are opportunities in people making wind turbines, wave energy systems. Actually, Britain is pretty good at that. There are some interesting ideas there which need some more backing, solar power, etc. These, like a lot of manufacturing operations today, they won't necessarily create huge numbers of jobs, but you can certainly expect Britain to be pretty good at a lot of these, and certainly I can point you towards, certainly in the wave energy field, 2 or 3 extremely good companies who are just looking for extra investment. Now, whether it all comes from the government or a source of or a mix of people is another question, but certainly the opportunity is there. But my way of looking at this is a bit broader than just looking at renewable energy sources, and say that the whole idea of operating machinery and equipment that will just use less energy is going to be a big part of the opportunities ahead. And there's all manner of opportunities, sometimes in a slightly adjacent way. I mean, for example, there's somebody I know making gas sensors in Scotland who is a good example of somebody who's come into this in the last 10 years. In other words, he's not a company who's been around for ages. He set up his company in the most recent period, he was an entrepreneur who seized the opportunity. He did get some investment from various private sources. He's probably got a bit of government money as well, some grants maybe. It's all been backing something that gas sensors, his kind of things, that they fit into equipment that do various chemical processes that just work that much more efficiently, using less energy, and that could be linked into other kinds of equipment. You could embrace his kind of operation, gas sensors. You might think it's nothing to do with renewable energy, but it's all related to the idea of making things in a more, or in a less environmentally damaging way than has happened up to now. Once you examine all this, you get a whole list of opportunities that are much beyond your conventional renewable energy sources. It becomes a richer diet of possibilities which we all need to open our eyes to.
Okay, let's take some more. Chap at the back, right near the microphone. Thanks.
My question is for Vicky Price. Do you want Greece to leave the euro, or do you want Greece to remain in the euro? And would you like to see the euro be made to work, or do you want to see the euro break up?
Lovely, that's clear. There's another one just over there.
Do you think it would benefit the UK economy if we left the Eurozone?
If we left the, sorry?
EU, sorry.
Right, okay, sorry. We haven't done that bit yet. Anyone else? Yeah, there's one right at the front here.
Okay, three of the industrial sectors that have done terribly well in Bristol over the last 20 years and are not in manufacturing at all, but health, education and cultural and media, are they a good bet for the next 20 years?
Greece in or out?
Greece in. In fact, one of the chapters of my book is called "Why Britain May Leave Europe Before Greece Leaves the Euro." So it touches. So it touches on the second question too. Of course, I want the Eurozone to work. The question is, of course, how and whether, because it is in our interest to ensure that this is a reasonably strong region. And it goes really, touching on the other question too, we need Europe as a trading partner. If we left the EU, the next best thing that we'd be able to do would be to be like Norway or Switzerland. You basically end up still buying into all the regulations, still paying quite a lot for that membership, but having absolutely no say in the decision process. If we were to exit altogether, there'll be tariffs to all our goods, and that would make, in the sense of not even being in the economic union, in the association which exists, to which Norway belongs, and that, of course, would be incredibly bad for the UK. So the cost of exiting the EU for us will be quite enormous, whatever loads of UKIP publications have suggested, which have calculated, to my complete amazement, that the EU costs the UK 10% of GDP, which is so easily refutable as to be laughable.
Andrew, out of the EU.
No, I'm in favour of UK staying in the EU, and it's a very big market for us. I would like to see it actually playing a more constructive role in the EU. I think the UK tends to be a little bit sidelined from the stance that we sometimes take. I hope that Greece can stay in the euro area. I think the scenario in which Greece might not be able to stay in the euro area is if the Greeks themselves conclude that they can't continue to run their economy on the current basis. Now, that is not a good outcome for Greece, and it's not a good outcome for the euro area. But they could still, end up in that place if they find that the stresses and strains in their economy are just too great. But I think they may well then find that it gets even worse outside the euro area. But it's the politics of it as well as the economics. Can I just pick up this question about health, education, and creative and media? Because I think Peter makes a very good point that we should have a better understanding about manufacturing, and I'm a great fan of manufacturing. But where the UK actually does particularly well in the trade, in the world of international trade, is in terms of of services. Education is actually an export from this country because people come and spend money here from overseas to consume education. The creative and media side of the services is also very good for wealth generation. And I think that alongside Peter's sort of emphasis on manufacturing, which I would very much support, we also need a recognition that given the very diverse economy that we have, which has the majority of employment, the majority of GDP is created in the services sector, we should be thinking about trying to ensure that our services sectors can also sell and are successful overseas. And I think when George Osborne talks about March of the Makers and people are focusing on manufacturing, it sometimes puts in the shade very successful sectors of the economy. Even the sector that I work in, professional and business services, it's not the same as financial services. We do a lot of business with firms overseas. So I think health education, creative media, and a whole collection of other service sectors are going to be very important if the UK is going to continue to grow in the future.
And those are all industries that have been quite dependent to some extent on public spending, aren't they? Is there still...
Well, there's an interlinkage between, but parts of if you take creative and media, actually, one of the things that reinvigorated that sector was when some of the big broadcasters like the BBC and Channel 4 were obliged to buy more from independent programme makers. When they did that, these independent programme makers then went out and got business overseas. So it's getting the right relationship between government and the private sector. And where the government is active, I think it needs to think about not making the private sector or the activity that it's responsible for its prisoner, that it's giving it scope to actually grow externally and to develop business outside of the public sector.
And Peter, presumably some of those creative industries are some of the things that gives Britain exactly some of the kinds of skills that you were talking about, flexibility and innovation and those kinds of things.
Yes, well, indeed. I mean, obviously, when we're talking about creative industries, my point always is, that is a lot of manufacturing as well. A few years ago, the Financial Times had a supplement which they called Creative Britain, and I always argued to the people running it, because they had a set definitions what they thought was that, and it didn't include people who were involved with manufacturing and engineering. And I always said, well, this is a big part of it all. So the terminology sometimes needs to be looked at. I mean, of course, I recognise that Britain's got many capabilities and many sets of assets, and the ones that the man mentioned are amongst them. I was listening to something that Michael Heseltine talked about the other day, when of course he's a very wise, experienced man who was given the job of promoting this growth review, and he said Britain's got to make the best use of its assets, which of course is a view I'd echo. I suppose my point about manufacturing is that these are assets that have been undervalued and neglected. I mean, the other point that's worth mentioning is that a lot of the manufacturing, or a lot of the output in economic terms of manufacturing companies is actually a service output. If you were to redefine it, there's so many add-ons that a manufacturing company who makes products can do in the way of services, that it adds a lot to the potential of that sector, in the same way somebody making jet engines can sell after care packages to the airline company, which will make use of some new turbine blades, etc., which he's made, but will also make use of the understanding and capability that he's gained through the actual manufacturing process. So all these things need to be taken into account.
But also the extent to which the creative sector depends on the manufacturing sector. So any marketing, any upgrading of the product, any sort of packaging, design, any advertising that you need, and so on, that's basically what the creative sector does for you. And you use the media to do that. So the two are interlinked rather than being necessarily separate. But where the real difference will be, though, is in the bits that remain not non-tradable, if you like. So we're talking about health, but it will be social care that's going to be increasing in terms of employment. What do you do about these types of jobs that are probably not going to be able to attract an awful lot of pay over that period, and it won't actually also be exportable as such? And that can be a drain on the economy, however important these jobs in fact are.
Okay, any more hands? Let's take some more.
There's a lot of talk about reinvigorating manufacturing, but a lot of this talk doesn't seem to come from engineers or people who actually know much about manufacturing. How do you think we're going to boost our manufacturing sector if culturally we tend not to listen to engineers or value them or pay them, and we don't plan our infrastructure investment with the help of engineers who are actually going to have to design it and build it?
Is there a lady just along, or are you pointing at this chap here? Chap at the front, very keen chap at the front here. There we go.
Oh, thank you. Both Peter and Andrew, my question's rather similar to the last one. Both Peter and Andrew and the government talk about wanting growth and encouraging manufacturing. But I'm more interested to know exactly how you would encourage the government to encourage manufacturing. Is this a tax issue, or are you going to help them some other way, or help them export or something?
Or just say nice things about them, which seems to be roughly where we are at the moment. There's a lady there in an orange top.
What is to be done at a local level? I'm thinking here particularly of the role of public bodies in securing economic stability, economic prosperity.
Okay, should we take one more, because I think we can sort of, those manufacturing questions are quite close together. There's another lady here, yeah. Hi.
I have a question, especially on the external borrowing, because the whole debate or discussions are all about the recovery and rebuilding. How about the stability? What I think is, if in a downturn, still government borrowing, especially the external borrowing, then it raises the question of instability in people's minds. So people's confidence will be down, and also it creates a large instability in the future. That's my first question. The second one is, how about, some researchers propose a dual currency in Euro area. It turned out my first supervisor is not very pro-Euro area, but my second supervisor is pro-dual currency, and I want some suggestions here.
A dual currency being, so the weaker members of the Eurozone would drop out into a weaker currency? Is that the idea, the peripheral?
I think so. It's kind of two level of currencies, yes. Strong one and like France and then Germany, and then the rest of them. So I need some suggestions.
Well, I might have the same problem with my panellists that you've got with your supervisors, but we'll see where we get to. Peter, why don't we start with you? There's two manufacturing questions there.
Yes.
You know, why don't we pay more attention to engineers and manufacturers,
yes.
and what exactly can government do to encourage?
Yes, well, those are very good questions. I mean, on the first question, I've found there's a lot of the top engineers in the country are actually quite shy characters and not very good at putting their views across to people, which helps to explain why their views aren't taken into account very much. I mean, if I was to ask you, if I was to tell you to start with that probably the most talented engineering entrepreneur is again the kind of Bristol link here. He lives about 20 miles away from here. He's called Sir David McMurtry. Now, I bet not many of you have ever heard of him. He runs a company just outside Bristol. He's got 2,000 employees. He set it up in 1973. It's the world leader in specialised instruments. He sells overseas 95% of his production. 95% of his production is in Britain. In fact, I invited him to this, but I bet he hasn't come.
I was going to say, let's make him stand up and take a round of applause.
So, I mean, I'm just saying that because he set up this amazing company. Hardly anyone's ever heard of him. He doesn't like talking to people. Well, not unless he likes talking to other engineers. Over 20 years, I've trained him to talk to me.
No wonder he's not here.
Yes. So what I would do to answer and to answer both those questions, I would try to put more of these people in the public eye. I've suggested this to people actually to raise £20 million from the private sector. There is lots of money in the private sector, and put a TV advertising campaign or maybe a film campaign in cinemas to tell people about what's going on in engineering, to get a better public profile for them. In other words, to get these kind of characters to speak more volubly about what the opportunities are. And that, I think, is a concrete suggestion, which so far hasn't taken off because my people who I've talked to, I suppose, have got other things to do with their millions of pounds.
Things, yeah.
But to answer the point, the man there about what you would do, concrete measures, was certainly I would continue some of the work that's been done in teaching. I would actually give more. If you're going to be a physics teacher, I would give these people a supplement to their salaries, or a mathematics teacher. I think to some degree some of this has been done, and some of the trends have been encouraging. Now, I mean, there's always going to be somebody who argues, well, what's so special about physics or maths? I'd say it is key to a lot of Britain's future prosperity. If you do good things in physics, you just can't go wrong. It's going to bubble up into the economy some useful way. Some of it will get into tradable goods, which we need more of because of the export questions. They might go on to become consultants or even doctors or surgeons, but you can't get enough of good physicists. And we don't have enough of them, and so therefore I would do something about that. There are some other areas of training I'd again put money towards. I wouldn't go around necessarily putting loads of money into existing companies. I would try to attend to the next generation. I would have my state-backed bank, although Andrew would be arguing, and I've heard now Vicky would be arguing against it. But I would staff them with good individuals who weren't government civil servants, certainly, but were people who understood what's going on. And I think that would be a useful thing. So those are a few concrete suggestions, anyway.
Vicky, there's quite a lot to go at there. There was the question about local growth and how you nurture local growth.
Just to say that, though, on the manufacturing and engineering stuff, that actually manufacturing and engineering does attract a lot of government attention and advertising spend. There is the Manufacturing Advisory Service, which has been proved to be a success. And we decided a few years ago that, of course, engineering was a thing that we needed more people of. And there's been a big campaign. I hear the occasional ad about this on the radio. At least I did hear it. I haven't heard it recently. But then the Careers Advisory Service has been given the task to explain to students how much more they can be earning being engineers, including girls, rather than doing other things. And that message is going through. At the same time, though, you still find that people go and do engineering and then they say, I haven't got a job. It's much more difficult to do that than if I had done something different. I mean, the employability of people who do media studies is actually rather high, whereas of those who do engineering, they don't actually know quite how to get their first job. And so there is a problem. I think the industry isn't quite doing the right things to attract people, and closer links with universities has to be the way forward, which we certainly have encouraged. But there is an obsession, I think, in this country with manufacturing, quite rightly too, up to a point, as we described the connections between the various bits of the economy. Because, for example, if there are 900 jobs, or even 150 jobs in some manufacturing company that are going, there's huge sort of front-page news. Then Sainsbury's creates 30,000 jobs over the next 3 years and nothing. Well, there's a little mention, and then it's forgotten, as if that side of the economy doesn't really matter. So, of course, the higher skills in manufacturing, really important stuff. You don't know what you do with these people or retrain them. But nevertheless, I think, actually, if anything, there's disproportionate attention being put into manufacturing. The point, I think, that Andrew was making, not necessarily a bad thing, but it is already there, so one can build on it actually quite easily. So I don't think it's very, very difficult to achieve to get more of the engineering emphasis there that's needed. In terms of Europe, of course, there are loads and loads and loads of different views on how you can do it. Indeed, there could be a breakup with Germany leaving and re-establishing what it had before, which is actually having sort of Austria, the Netherlands, possibly Finland, if they're that way inclined, and being part of their, and Belgium being part of their little bits, but no France, because France actually is a very different economy and is unlikely to be for any sustainable period in the sort of strong bit of the Europeans. And of course what this will mean is that that euro will then rise so significantly that in fact Germany is going to go into a free fall because it's no longer going to be able to sell any of its products. So it's not a very good idea. The other countries are not going to like all being merged together anyway because there are huge differences between the Greeks, the Italians, the Spaniards, Portuguese, and then the Irish. I don't know. Maybe the Irish will rejoin the pound period. So who knows? All sorts of possibilities. But there is a third suggestion, which I think is completely crazy.
Don't confuse her even more, Vicky.
There is a third one, which is that there's going to be, which may be what your second tutor was talking about, which is there will be a parallel currency. So there will be official transactions which are going to be in the euro, and there are going to be other currencies circulating, like IOUs that you sort of trade with each other. I mean, it's complete madness. I think that could ever happen. So my view is that it's either going to be, but the first possibility is still a possibility that we go back to the snake or whatever it was that we had before if there is a breakup, because I don't think there's going to be a second group. I think there would be either one smaller one or the euro as we know it now, possibly with new members.
Stability and external borrowing. And if
stability.
we borrow more, aren't we threatening our future
Well, we are
stability?
borrowing more. I mean, this is the interesting thing. I mean, just look at what's going on in the UK right now. We are borrowing a lot more than we said originally, and we're going to be borrowing it for a longer period of time. And we're probably not going to get to our debt-to-GDP ratio for quite some time. But the markets didn't blink. In fact, if anything, the cost of borrowing has gone down.
I've got a bit more sympathy with that view that the questioner asked about, if borrowing continues at a high level, that is part of there's one factor that can undermine confidence, because people know that at some point this issue has to be corrected, and therefore just deferring decisions is deferring difficult decisions. We know in our own lives that this is not necessarily the right way of approaching things. You need a gradual and measured attempt to get public borrowing and other imbalances under control. I think it's the best way is to have such a policy and to stick to it, which is by and large what the government is doing, where you can have disagreements with some of the detail of their policies. On this idea of a dual European currency, I can't think, it doesn't make very much sense to me at all. People want to join the euro because they see it as one is it's seen as a sort of strong and durable currency. Okay, it's got its problems at the moment, and it also encompasses a large part of Europe, and hence cuts out the need for currency transactions within that bloc. I don't see how a sort of second-tier European currency meets either of those objectives. It's not very attractive. I think if countries did start leaving the euro, they would, over a period of time, start to try and stabilise their new national currencies and get back against the euro. And I think we'd probably end up coming back round in sort of 30 or 40 years' time back to where we started. Just one final thing. How do we help manufacturing? I mean, this is a long-standing thing that people have agonised about in the UK. Based on my experience working in CBI and working in various business contexts, skills and education and infrastructure seem to be two key issues for manufacturing. Manufacturing is to do with goods, therefore, and access to the rest of the world, therefore infrastructure is very important. And the fact that we can't make even a decision on where to put new runway capacity in the economic heartland of the southeast of England is a very negative thing for the UK. That's on the infrastructure side. And the fact, as Vicky said, that some of the government spending cuts have fallen most heavily on infrastructure is also not very good. On skills and education, I think we miss a trick because we actually have higher education in the same department as the business department. Now, Vicky knows more about this, she used to work there. But I'm not sure that thinking on higher education and on business strategies has joined up in that department as it ought to be. I think universities could give much stronger incentives to spin off university academics, to spin off their ideas and commercialise them. and to develop alongside university science parks. And the final thing I would say on manufacturing is a long-standing issue that's been identified going back to, I think, the 1944 Education Act, is weakness in technical education in the secondary school system beyond, beyond age 14, 15, 16, before people, whether they would qualify to go into university. My father actually went to a technical school and a technical secondary school, which I don't think those types of schools exist anymore. And he then went on and studied engineering at university and so on. So it doesn't mean that people just end their careers if they get a technical education, but it can also feed apprenticeships and things like that, which are very important to manufacturers.
It's one of those things people have said about the British economy for such a long time, isn't it? And Vicky wanted to come back, and we haven't tackled that question about growth at local level and what what we do about that, and whether public bodies at a local level can get involved.
Well, I mean, as we all know, the regional development agencies have all been abolished, and we have now the LEPs. And in some cases, they're going to be getting more money because of the Regional Growth Fund and the
enterprise partnerships.
Local enterprise partnerships. Which I think I was in the department of business when they were abolished. And it is true that in some cases they weren't perfect, but I seriously worry that actually the more you localize things, I mean the regions were fine, but the more you localize things, you might actually completely lose control of what it is that you're trying to achieve. I mean, what had worried me, even at the regional development agencies, that there was only one that had a chief economist or an economist there who could do a proper strategy for the region, which we then were trying to supervise. But it was very, very difficult, even then, to really know whether you were getting value for money, and the results were properly monitored, which we were trying to. So I worry about the local, although it sounds good from high above, because you think that perhaps local people get much more involved and do the right things and understand it. In reality, I have great concern about that. But where I do think that the local things would be better is if we were to move towards a sort of, particularly an SME bank, which is backed by the government. The only way to make that work is for that to really be local, so regional and local, because what you have lost in the last few decades is this ability for the local bank manager and anyone who was involved in any decisions to understand what the businesses they were dealing with were doing, and whether indeed they had a chance of survival or not. And the removal of that into some sort of corporate centre has been really detrimental in terms of making sure that companies are able to get the finance they need and meet the local needs that they have. So at that point, I think it is important. But otherwise, I really worry that the way things have moved, in fact, if anything, because it's not going to work, many more decisions, even at the government level, will be taken much more centrally than the original idea perhaps had in it when it was pronounced. So I think we're talking about localism, but apart from the LEPs, the local enterprise partnerships, I think a lot of what goes on right now is actually moving in the other direction.
Thank you, Vicky. And I think that's, we're just about to run over time, so I think that's a perfect moment to wrap up. And I mean, as Andrew said, Festival of Economics does sound like a bit of an oxymoron, and I must admit, some in the office did smirk slightly when I said that was what I was going to do with my Saturday afternoon. But we have heard some we've heard some challenging messages, but some quite upbeat ones and some quite optimistic ideas too, I think, about the British economy, which is great to hear. So I've enjoyed myself. I hope you all have too, and perhaps we can thank our panel, Andrew Sentence, Vicky Price and Peter Marsh, in the traditional manner. And don't forget, the books are at the back of the room.